But one of the greatest things that I've noticed being here in Seattle, so just a few reflections on the conference, is the conversation around not if we invest in space, but when we invest in space or how we invest in space. It's no longer this question of the value of space. It's a question of how do I play into this ecosystem? How do I play into this economy? And where's my sweet spot in the greater space economy, the space value chain, and what can I do to help further this along? So I think that's great. I think we're all very, very excited to be chatting about this. Being here in Seattle, we've got the largest turnout we've ever had. I'm very fortunate in the fact that this is my first year here. Last year I was merely an attendee, and I'm lucky enough to be a part of the foundation and driving the sort of next generation of entrepreneurship and industry engagement. We're thrilled to have you all here. And well, you know what? I have a bunch of facts in case anyone wants facts. So let's do this while they get all mic'd up. It's significant. It's a good time to be in space. It's a good time to be starting a space business, for that matter. You've got a record number of investment last year. You've got multiple market gaps where technologies can easily be extracted, put into the market, commercialized, and provide value to not only the space industry, to ourselves, our colleagues, and our friends here, but to the global economy as a whole. There's only room for growth. And from an actual investment standpoint, there's some interesting facts. 803 are the number of VC firms in existence. There's over 1,200 funds, and the number of VC funds raising money in 2014, the last time this set of statistics was really updated, was around 250. That's significant. There's a lot of money out there, but they're not just looking for investment in the new space industry. They're looking for investment in energy, in analytics, in data, all things that can help us. So we're excited to be a part of this growth. We're excited to have a great panel coming up shortly, and you'll hear from some good viewpoints. I think they're ready. So if you guys want to head up here, that'd be great. Thank you.
Great.
Yeah. Thank you, gentlemen, for joining us. We're very happy to have you here and look forward to a good conversation. There'll be time for questions at the end, and I think the conversation today will really prompt some interesting ones. But as Andrew had said, my name is Jeff Matthews. I'm the Director of Venture Strategy and Research for the Space Frontier Foundation. I'm also the Director of their NewSpace Venture Labs, which is a new initiative to really help promote what the foundation's core tenets are of getting entrepreneurship towards investment-ready ventures to fill in the gaps. We couldn't be here without these wonderful gentlemen because we try to feed those companies into their deal flow and their businesses as a whole. So let me introduce them. We'll start at the end and go down. On the very end, we've got Jonathan Taylor. He is a venture capitalist at Extranet Ventures. We've got Chad Anderson. He's the managing director of the Space Angels Network. Tom Gillespie, a partner at Incutel. Sorry, Sunil, I skipped over you. And Sunil is the vice president of Balmir Venture Partners. So why don't we go, Tom, why don't you start? If you want to just tell us a little bit about what you're doing and where you're from.
Okay. Tom Gillespie, Incutel. Excuse me. I work as a partner in the investment team in Incutel. We're a strategic investment fund that works for the U.S. intelligence community primarily, a little bit with DoD and Homeland Security as well. And we put money to work investing in commercially oriented companies to bring them across over to serve intelligence use cases as well. So with a little bit of money, we take a commercially focused product and solve a challenge for our customers. We work with about 10 different government agencies. We're not part of the government. We're set up as a nonprofit government contractor effectively. And we put about $500K to $3 million to work in any given transaction. And that's a combination of equity investment and also development. So we'll ask a company to take what it's doing commercially, and over the course of a couple of years, typically, add a few things to it and meet the need for us as well. We're relatively new to space investing, but excited about it, and have done a few things over the course of the last 18 to 24 months. But it's a very exciting sector, and we're looking forward to being part of it.
Thank you very much. Sunil?
Thanks for having me here, Jeff. My name is Sunil Nagaraj. I'm with Bessemer Venture Partners. Personally, I'm a huge space and astronomy nut, always have been since I was a little kid. And at Bessemer, about 6 years ago, we started to invest in the space sector. That began with our 2010 investment in Skybox Imaging. In 2014, when that company was sold to Google, we all started to realize that space feels like what we invest in primarily, which is tech. In Bessemer, we were the first investors in Pinterest, some of the largest investors in LinkedIn. Twilio went public today. We were the largest investors there. So we mostly do tech, but because Skybox and the characteristics of how quickly it grows and how little capital it needs, got us really revved up on space. So since then, we've invested in 2 more space companies. In December 2014, we invested in Rocket Lab. And then in June 2015, we invested in Spire, a small sat constellation. So I'm hoping to invest in more and more space companies and also help out the ecosystem where we can.
Thank you very much. Chad?
Thank you. Very happy to be here. So Space Angels Network, I think you've heard from a number of our members and portfolio companies throughout the last few days, so I'll try not to repeat the things that you've already heard, but we are a global network of accredited individual investors who invest specifically into space companies. So we've been around since 2007, way back before there was a whole lot of entrepreneurial activity in the space sector, and we've been growing with it. And we've done 33 companies, invested in 33 companies to date. You saw on some slides earlier that we've done 4 this year. We've got a couple more that are in the process of closing. And so, yeah, and we just, we just broke 200 members, 23 countries in this last week, and I think we've got 15 new members just this week. So the growth is really exponential. We have a footprint in most areas where there's space activity, and it's just really exciting to be part of this sector and seeing it all come together, and being in Seattle where there's been a fantastic turnout and a great conference. So.
Thank you very much. Jonathan?
Yeah, hi, Jonathan Taylor. I started off life as a software engineer and amateur space geek. I was at the first shuttle launch and about half of the launches after that. And after a while on the software side, I accidentally got better at transactions than I was at coding. And along the course of some companies that I started, I had acquired 17 companies and sold 8, and eventually figured out that that had more value than writing code, at least for me. Since 2013, I've had $250 million of exits in my portfolio companies, and I've taken a lot of that and I've been reinvesting that, especially in the NewSpace ecosystem. I've made my first 2 NewSpace investments here in the last 6 months, and look forward to doing more.
Thank you very much. So we'll dive into the questions in a second to get the panelists going, but let me give you a little bit of background on why, again, this is important and what this means when we talk about the space economy. So a quick definition of the space economy is the full range of activities and uses of resources that create and provide value and benefits to human beings in the course of exploring, understanding, managing, and utilizing space. It includes all public and private actors involved in developing, providing, and using space-related products and services, ranging from research and development, the manufacture and use of space infrastructure, to space-enabled applications, and the scientific knowledge generated by such activities. Last year alone, we had a record amount of investment. If you look at the investment put in, it was almost $2 billion by venture capitalists alone. To give you an idea of what that means for the grand scheme of things, since 2000, the total investment from any source in the space economy has been approximately $8.1 billion, and of that, VC is almost $2.9 billion. So very significant trends of upwards investment, and we're very excited for it. So speaking of areas to invest, question for you guys: what space area presents the greatest immediate needs, and do those needs translate into startup opportunities? Should someone be pursuing a startup, is it right just because you have a new technology? If anyone wants to jump in and start with that, I'll leave that one open.
I'll start with one that we've seen in several companies. So I'm going to draw a lot of parallels between the space industry and the tech industry. And it turns out in 2016, in the tech, if you wanted to do a tech startup, the actual act of building whatever you're going to build is not hard. It's not the hardest part of your business. The hardest part of a tech business is figuring out what to build and then actually starting to sell it. And up until recently, space, the hard part was actually building it. And more recently, we've learned that there are other sectors of sections of running a space startup that are more difficult than the actual product. When we were on the board of Skybox, we learned very quickly that launch, just to answer your question very point blank, launch is incredibly tricky and difficult and gets pushed and gets delayed and is subject to geopolitical risk, et cetera, et cetera, et cetera. So and that's why we led to our sort of quick and decisive investment in Rocket Lab. And now, as part of the board at Spire, we see the impact of launch delays yet again. And so, that's still an unsolved problem. Launch presents a major opportunity. I'll say that the characteristics of launch are pretty different than the other space startups we're looking to invest in. Launch, in many ways, is kind of relatively big, relatively expensive. One of these things where you sort of need to go into a room, work on it for a year or 2 years, cross your fingers and come out of the room. It's a little different than putting up a Pathfinder satellite for $200,000, seeing if it works, putting up 3 of those, seeing if those work. Those are the kind of business we prefer to invest in. But for the moment, launch is it's totally a bottleneck, and there's still nowhere near enough capacity coming online to meet that demand.
Thank you, Sunil. Jonathan, I'd love to hear from you on that topic about what you think presents the greatest immediate need, considering that you are a more recent investor in the sector.
Yeah, so launch is definitely the tip of the spear. It is the single biggest challenge for the industry to solve. There's a lot of interesting things that come out of that. And if you think about literally climbing out of the gravity well, like once you get out of the well and you're on the sort of gravity plane of the solar system, all the opportunities are open. We've got to get up out of that gravity well cost effectively. After the tip of the spear, the thing that I have really seen is the ecosystem that needs to be in place around, I would sum it up and say, look, at the tip of the spear is launch and satellites. I mean, I love manned space. I think that's great. I look forward to some civilian manned space in our future. But, the numbers from an investment perspective are kind of hard to work out today. And I think that will change. I think that's inevitable, a point I'll bring up again later. But, for example, amusingly, I went through a 90-day self-imposed boot camp last year to learn everything that I could about the opportunity to invest in space. I traditionally have been a software and technology investor. Like I said, a lifelong space fan, a lifelong space geek, but not anything approaching a professional capacity. As we went through that, Guillermo Solnine and I, we would keep coming back to this thing where we would have these conversations with companies which were embarrassingly amusing whenever it came to the point where we're going to talk about software. Right? And this is not a problem that you find just in space technology. You see this anywhere. Anywhere you get a bunch of guys, women, Americans, others together, and they're sort of focused on hardware, like software becomes this crufty afterthought. And we literally had one meeting where we were like, so what are you doing for software? And the team was sitting there going, what's the name of that intern that's working on the software? What is that guy? Is it Alan or Edward? What was his name? Software sort of becomes this afterthought in a hardware-centric world. And so much about space has been a hardware-centric world. So a lot of where I've been looking, where we've been looking, is where there are software and service opportunities within the NewSpace ecosystem to support the tip of the spear. I mean, the tip is great. We're not investing there because it tend to be high dollar, higher risk situations. But I think there's an enormous amount of ecosystem that has to get filled in. If you look at the potential launch manifests for the next 5 or 10 years, the amount of ecosystem that's going to need to be in place to support that, not just launch, just support it, all the components, all the software, all the systems, deal with all the complexity is enormous. So that tends to be an area where I'm really looking for opportunities.
That's a great and very valid point, especially at this time. Tom, love to hear from you.
Yeah, so I'd echo the concept of the ecosystem. We've looked across a number of different areas. I think probably for us, as a strategic investor, we're looking at 3 prime areas right now. One is launch, one is constellations in general, so of all stripes, and then one is content analytics. So what do you do with the information coming off these sensors? How do you turn it into something that's usable and sellable, ultimately? So those are kind of the 3 areas we've mostly been looking at. We've also looked at different component types of investments. mission management, some other things as well, but those are the primary areas for us.
Thank you very much. Now, Chad, in your position, you see a lot of very early companies, being part of the angel network. What about you? What do you see that's coming down the pipeline and that might represent an interesting area for opportunity?
Yeah, it's really similar to what everyone's said. It sort of depends on what your time horizon is, I guess. We showed earlier in the keynote, Joe talked about the way that we look at the market and the three broad segments, and then the verticals that go underneath those. And the near term, immediate term opportunity is definitely in those markets that exist today, and all of that's coming together, and there's all those opportunities now. And we've got sensors up there, and how to create that full solution for the customer, how to bring the data down, how to make it useful, all that other good stuff. But we're seeing some other very interesting stuff, in the other markets as well. And that's really as, an early stage seed investor in space startups. We have the luxury. We're looking out, at those really interesting, longer term markets and getting involved in those really early. So, we're very interested in the infrastructure, the transportation systems to the moon, what that means for the eighth continent, and the growing demand in utilizing an asset like the moon. The infrastructure that it takes for you to get there and to communicate and to build that, the system in the lunar ecosystem is very, very interesting to us. And then, how you use that as a launch pad going forward into bigger and better things.
Fantastic. Thank you very much. One of the comments that I heard both Tom and Jonathan say was, software, data analytics. In 2014, just for some reference, about 41% of the venture capital investments were deployed to software products or, software industry-related companies, compared to a 5% market share that included industrial applications, energy applications, and aerospace. So when you're looking at the software play, should we be investing more on the software side and specific software pieces? Would that help along the space case and help solve any of the pressing immediate problems? Tom, I'd love to hear from you.
Again, it's part of the ecosystem, right? Mm-hmm. So there's a balance in terms of how much you're going to focus on that, but I think it's going to be part of the equation because it's depending on which aspect of space you're talking about. For us, as a strategic, it's there's a lot of Earth observation, remote sensing aspect of this, and as you're thinking about that, you got to be able to create something useful on the back end. So that's why it's part of our equation. Absolutely.
And Jonathan, you had mentioned software too. Any thoughts on how those two industries can play a little more together?
Yeah, you think about the sort of infamous quote, Mark Andreessen, about software eats the world. And, the sort of parallel that every company is a software company. That is absolutely true in our industry. You just, for example, think about SpaceX, Blue Origin, and all the rapid testing that they're doing, right? SpaceX launching and then testing, attempting to land on barges and land on land. When they go from one launch to another, they're not re-engineering the rocket. They're not changing significant mechanical components of the Falcon 9. Between all those landing attempts, very little hardware changed. What changed a lot was software. Was taking the data that they gathered from their analytics on these attempts and go, oh yeah, whoops, no, we shouldn't throttle up that much at this point in the stage. We need to throttle up more. And they didn't have to go rechange an engine bell, redesign. They just went in and changed the software. So I think software is in any industry, is about the singularly most important thing we have today, right? We don't tend to solve most quote-unquote hardware problems by putting in new metal. We tend to solve most quote-unquote hardware problems by changing software. So I think you've got it both in the existing agenda of the industry and then also, again, in the surrounding ecosystem and the opportunities for analytics, for taking all the data coming from all the new satellites, for taking the data that are coming from launch systems, building solutions for them. Right now, most of that software is one-off. That was the trend that we found as we sort of toured the industry, literally and figuratively, last year. Lots of people doing the same thing, but one-off. And it very much reminded me of what you would see sort of pre-PC space and technology, right? So like mainframe era, custom systems, not standardized software. So yeah, I think my opinion, and I may have a bias coming from a software world, I think that software is the foundation of almost all of this.
Well, I'm very glad to hear that because I started a software-related company last week. It's not space, though. That would be fun. So, we've got an interesting panel here that have very different investment theses and oftentimes see companies at different parts in their fundraising life cycle. So starting with you, Chad, since you tend to see the earlier companies, what does your investment thesis look like for the space economy, and where do you look for investment opportunities specifically?
Yeah, I think it's really similar to, we look in terms of timelines and things. I think it's very similar to, what a VC or an institutional fund would look for. I mean, we're looking for companies that can provide, returns in a 5 to 7 year time frame. The types of companies that are really attractive to us are the ones that have really, really big, bold visions and borderline, sometimes crazy, that have fantastic teams behind them pushing them forward, and have figured out a way to, to fund those technologies through, probably terrestrial sort of revenue streams, right? So that's very interesting to us. I mean, we have a roadmap that goes from here to Mars, right? And we focus very much more on the area where we think that there's returns in the 5 to 7 year time frame. But yeah, I mean, there's tons of opportunities, from here out to,
Thank you. And Jonathan, since you're, again, earlier investor into this, more so from time, having recently made 2 investments, what does your investment thesis look like, and where do you look for opportunities?
Yeah, I really do not invest in ideas or products. I invest in teams. And many VCs, many investors will tell you that. We invest in teams. That's what we're looking for. I've talked with almost all of them in my pre-VC career, and I'll tell you that my experience with almost all of them was sort of less time learning about me than someone would spend in a job interview. And then, oh yeah, can we get back to that spreadsheet about your financial projections for another 2 weeks? You really want to talk about that? So there's a lot of sort of lip service about investing in teams. I think very few firms really have gone all in on investing in teams. We've spent 3 years building what we believe is as objective a process as you can build, and actually measuring the strength of a team, looking for the fundamental attributes which should lead to success over time, whether they have to pivot, whether the original business plan holds true. So yeah, we really focus on that. Our thesis is if you find the right people, if you find the right team, we don't really like the sort of individual founder. We'd like to see at least a sort of atomic-sized team of 3 people to start. If you find that right team, they'll pivot, they'll find their way to success, they'll battle through whatever the challenges are over the years to come, and get you some good returns to some great returns. So that's really what we're focused on.
Fantastic. And Tom, what about you?
Yeah, I mentioned we've become more active in the last 18 to 24 months. We've stood up a challenge lab called Cosmic Works as part of Intel. And if you go to the Cosmic Works website, you'll see that we've got an investment architecture on there that touches in fairly good detail on what we're looking for. And we're trying to fill out each part of that right now. We've made some progress. I think in some areas we'll probably double down because they're so important to what we're trying to do. But that's really the core of our investment thesis. In terms of stage, again, we're strategic, so we got more flexibility. So we can do seed stage, we can do ABC rounds, et cetera. It's really, what do we see in the opportunity? Do we have an end customer we think that'll support the deal? And can we get there with the team and the opportunity?
Fantastic. And for those that might not be aware in terms of physically where you look for investment, especially because you're doing this, on at least for the U.S. National means, can you comment a little on that?
On geographic?
Yes.
Yeah, so most people assume that we only do U.S. Investments, which is mostly but not completely true. We do non-U.S. investments. Probably 5 to 10% of our portfolio is non-U.S. So we're looking for the best ideas anywhere. If we see them out there, we can get a deal done. It's a little more complex, but it doesn't. We're not precluded from doing that.
Fantastic. And Sunil, what about you?
The question is, what do we look for?
Yeah, what does your investment thesis look like for the space economy, and where do you look for investment opportunities?
Sure. So again, it starts with tech investing. Whenever I meet or hear about any tech startup, I usually ask myself and I ask the entrepreneur three simple questions. Does anybody want it? Are there a lot of those people? And can you find them? Three very simple questions. And the same general framework applies to space. Now, what you'll note in that framework is not how long is it going to take to build? Can you build it? Is it possible? Because again, that is, we're in a lucky enough time where that's a foregone conclusion that it can be built. The main thing is, does anybody want it? Are there a lot of them? And can you find them? So what that translates tactically when I meet a space company, so far we've only done Series Bs in space. You know, Bessemer we do a wide variety of stages, but within space we've invested in the companies that are 2-3 years old that have had some momentum. But those three questions hold true, and the first one is 90% of the battle. Does anybody want it? Which sounds overly simplistic, but that manifests as asking for customer signs of customer interest, signs of customer demand, letters of intent, signed contracts, excited partners. You know, the single biggest thing I think a space entrepreneur can do to impress me and unlock investment is to point me to an unmet pocket of demand, and that's 90% of the battle. The other 10% is why are you going to be the best person to service that demand? What unique approach do you have to service that demand? But right now with the space sector, the trick right now is to find there's a lot of solutions looking for problems, which is natural at this stage in the sector where there's a lot of new technologies that can be applied to the rest of the world outside of this insular space industry. But you sort of have to imagine that maybe farmers in Iowa want to get multispectral imaging, or maybe marine traffic will want to be able to follow their ships every 2 minutes. But those all sound intellectually interesting, but it's 100x improvement in confidence if you can point me to one customer who says, yes, I want this particular service, or yes, I don't like a daily revisit, I want hourly revisit. There's so that's really what I look for is give me customer quotes, give me customer signals, give me customers I can talk to. That's the single biggest signal threat.
Well, thank you. And you mentioned issues with solutions looking for problems. You know, that's one of the things that we're trying to help with is to tell the entrepreneurship community that, you know, you need to solve a market gap. You need to really look at what the market needs, where you can fit in, and not just this is the greatest sensor ever made, and of course it's going to make $1 million because I'll throw it out there, overnight.
Well, and I'll throw in one other to add to that point. Steve Blank is one of my role models in terms of entrepreneurship.
He's wonderful.
And one of he's a professor that's different in Berkeley and teaches about lean startup practices. And the best quote he has is get out of the building and talk to customers. That's like the single biggest thing entrepreneurs should be doing. And people think that means sort of conceptually, you know, go pick up a phone. No, but literally walk outside of your building and go talk to real customers who might use your product. He has a class at Stanford where students work on business plans, although people don't write business plans, as they pointed out earlier. They work on starting businesses, and what they have to do is every single week they have to talk to 10 customers. Over 10 weeks, that's 100 customers, and I would say 99% of the startups that pitch me have not talked to 100 potential customers. I mean, that is such a valuable thing to do to educate yourself on the market. And I understand why it's tricky to talk to customers, because usually in order to start a company, you have to have so much faith to sort of ignore the detractors and push forward almost with a blind faith. But that needs to be informed by lots of real input from real customers, not your friends, not professors, not analysts, but like real actual people who might actually buy your product. So I would recommend everyone poke around and Google Steve Blank if you want to follow more of that stuff.
I would second that, and someone maybe we'll start a Kickstarter for Get Out of the Lab, go talk to some people that want it. T-shirt. Bessemer sees quite a bit of investment, across multiple sectors. Is there any sector that you can point to that actually does that better, where they come in with a much larger identifiable customer base?
Within space or?
No, within across the portfolio. Like what other sector could the entrepreneurs learn from?
I see. A lot of consumer internet startups do a significant amount of market testing, and market testing is this big fancy word. Tactically, what that means is they can go to Google, use Google's AdWord tool to figure out how much it costs to buy an ad. And if they were to purchase that ad, they can put up a landing page and see what the conversion is. So now they know what their user acquisition cost is. And they can do that with 15 minutes and $20. And that is an amazing thing that was not possible 10 years ago. So they will test the demand, they'll see what the volumes are. They can look at Google Trends to see how many people are looking for photo retouching on mobile, for example. And so that level of market signals is tremendous. In consumer internet, you have so many potential users. Most space companies are talking about 5, 10, 50 customers. You're not talking about 5 million customers, so it's a little trickier to get that signal. But if they can look for lean startup practices around consumer internet, sometimes it's called smoke tests, sometimes it's called agile, sometimes it's called A/B testing. Those practices, the more they can be filtered into tech companies, the better. No, space companies, the better.
Fantastic. And Chad, do you see that being an issue for some of the earlier stage companies that you see that haven't done enough market validation?
Well, this is definitely the case in many cases. I think Snail's got a really good point. But the best ones, the ones that you really perk up and you listen to, are the ones that have done that. It's a little bit different, though. We were showing a chart earlier with a couple hundred companies that had raised money, right? So these are not startups on paper, but these are the companies that have raised some money. So your customer list, you can't do 10 a week for a week, 10 a day for a week because you run out of companies. So it's a smaller base, and it is a little bit insular. So I think that there's some nuance there. But the methodology and the idea behind it is still holds very true. Those are the pitches that you listen to. Those are the ones that you the work's already been done for you, and you can pick up the phone and start calling those customers as well. And you can get a feel as somebody who wants to be involved in the project and is interested in what they're doing, and saying whether or not you want to get involved and put some resources behind this. You can hear firsthand from their customers as well, which is an important step in the whole vetting and understanding process.
Fantastic. So the commercial space industry is not new, nor is it a new concept. So I'd like to explore what has changed to make space suddenly more attractive from an investment standpoint, and what we can do to attract more investors in. So I personally know that I got interested in space because my grandfather helped put people on Mercury. It was an easy thing to listen to the stories and share in that passion. But I promptly became a finance major. I wasn't going to be an engineer, and I've completely wanted to get back into space from helping an entrepreneurship perspective, but I've yet to find my sweet spot to create my own space company. But when I'm ready and when it's time, these are the people that I'm going to go to. So what can we do to expand the pool, and what makes it space more attractive? And Jonathan, I'd like to start with you.
Yeah, I think the main things that have made space more attractive are what I call the 3 C's, and again applies to many markets that are going through transitions like this. The first C is chaos theory, right? We have a natural tendency to believe that we can predict the outcomes of things far better statistically than we actually do, right? Whether you're talking about investors or space engineers or the stock market, our belief on what we can predict and what's going to happen is way beyond what actually happens, right? And one of the things that, for example, chaos theory, which talks about how even in highly deterministic systems, even small changes can make major impacts, right? Or so an analogy to that is the butterfly effect, right? Like the butterfly flaps its wings and causes a little bit of air to move. The next thing you know, you have a hurricane and everything changes. And there's a great example of that in our industry, right? There's a butterfly effect moment in our industry. If you've ever read the story about Elon Musk going to Russia twice to try to buy a missile in order to launch something to Mars, you see the butterfly effect. I call it the Russian spitting butterfly, right? The literal, or maybe it's just the story is more colorful this way, is that in one of the meetings when Elon Musk went to buy one of these missiles, some Russian general or bureaucrat literally spat at him, right? And said, you fool, you don't understand how this market works. He did not get into this industry thinking, I'm going to start a company and land freaking rockets on barges. He just wanted to send some stuff to Mars. And on the flight back from the second time he went to try to buy a missile to launch something to Mars, he just said, I'm going to start a rocket company. I'm just going to do it, right? So just think about it. If that general or that bureaucrat hadn't have said, no, you foolish American capitalist boy, this is not how the space industry works, odds are he probably never would have started SpaceX. Can we predict that in any form as investors, as entrepreneurs? No, we can't predict these sorts of things. So I think the biggest thing is just that you have all these factors, and we think of it as deterministic. We think that the industry had a momentum, was going somewhere, and then all of a sudden a general pisses off Elon Musk, and now there's 60% of the commercial launch market. So you have to figure out how to take that into account. I think that actually has been a major impact in our field. The second C is confirmation bias. And you see this in a lot of industries. This is why industries sort of go through these waving cycles. You do something, it succeeds. You go, oh, hey, that succeeded. I should do it that way again. I should do it from now on. And you start viewing everything in the confirmation of that success, right? That confirmation bias. And I think a lot of, especially the incumbents in our industry, have been viewing the industry that way. We always did things this way. It worked for us before. It's not it's all about reducing the risk of the thing blowing up as much as possible. So let's just keep doing that. And the problem is that doesn't work in any market that's over $10 billion. You can carve off a private little market of some sort of niche industry that's a couple $1 billion and sort of run that way. But as soon as things tend to get above $10 billion, there's going to be some crazy person out there who goes, no, actually, I don't think it should be done that way. I think it should be done this way. And what's going to happen is, literally or figuratively, they're going to blow stuff up a lot. But as they keep blowing stuff up, things work out. Again, you go back to like the original videos of the American space program, right? It wasn't about all these launch successes. It was just rocket after rocket after rocket blowing up. And think of that. Forget about we're in space and just think about that as startups. Like, as a market, that's what startups do. You have so many startups. They try hundreds and hundreds of things, most of which aren't going to work. They're going to blow up, right? But then they succeed. So how do you get rid of that confirmation bias? One of the ways is you just have so many different attempts from seemingly random vectors that you figure out without confirmation bias something that's going to work. Again, that Russian general and they're sort of basing confirmation bias. Like, I've been doing this my whole career. You don't know how this works, silly man. And the third, and it's amusing, I think in this industry maybe there's a fourth C, but the third C, I think, is culture. I think that culture has the biggest impact you can imagine on a company. And during that 90-day boot camp I went on, I think we almost literally visited like every launch company that actually launched or wanted to launch in that period of time. And I was at places like I was at places like Aerojet Rocketdyne, and let me tell you, it only takes, how many of you have been to the SpaceX facility, for example, gone on a tour, been in the building? Okay. It only takes about 30 seconds to realize there's something fucking different going on here. You go to some of the other guys, and they would have these amazing facilities that they've had for decades. And I would literally walk around, and you couldn't find anybody working. They were a lot talking, there's a lot of test equipment not doing anything. You can't go 10 feet at SpaceX without running into somebody that is working and working their butts off. There is a cultural change that is coming to this industry. There's a cultural change that we are very much in the middle of. I was at another conference, which, let's say it's not the new space conference, it was the newish space conference. It was sort of new space, but then a lot of old space. And there was a gentleman there, sort of symbolically out of an old cartoon. I would have gotten away with it if it wasn't for you meddling kids. Who stood up and said, SpaceX and Blue Origin and all these companies have invented a thing. We talked about doing all of this stuff 15 years ago. Yeah, but they're doing it. They're not talking about it. They're taking the risk that things are going to blow up. So I think that these things have all come together in the space industry, these three C's. The fourth C that I add to this industry is Congress. Space, unfortunately, is not something that you can break up into nice 4-year chunks and then completely change your strategy every 4 years and expect it to work out. Just recently I was reading up again about VentureStar. If they had just let VentureStar blow up a couple times, if they just said, fine, a carbon composite tank is going to work, let's try the aluminum tank and figure out where to get weight, VentureStars might be launching every day at this point. But the political support wasn't there, Congress, White House, et cetera. So I think you do have that sort of foresight in the space, but I think we're seeing change there. I think Congress is finally coming to where we're saying, okay, this is sort of inevitable that this world is changing. I think all of those things coming together is really what is driving opportunities for investors and for entrepreneurs today.
Oh, absolutely agree. I'm going to make a note that next year we'll actually put the loop of the rockets exploding up on the screen. A little bit of side entertainment. There's a 5-hour mix on YouTube if anyone's interested.
There is.
You mentioned, we'll come back to that topic in a second because I do want to hear from everybody else, but I'd like to chat for a second. You mentioned confirmation bias, and one of the things that we have seen is we've seen immense success from some of the CubeSat providers, especially Planet Labs and definitely Skybox. And I go around the country and talk to people in the innovation hubs and early stage entrepreneurs, and they say, we want to be the next Planet Labs. We want to be the next Skybox. And they have, maybe an interesting sensor, and they definitely have passion, but it's an incremental change from what is, might be actually out there on the market compared to these other companies that are in orbit and currently monetizing their services. Do you think that there is confirmation bias in terms of what people from the entrepreneurship perspective view as an opportunity? And Chad, why don't I ask you that, since I think you see probably a lot of companies.
Sorry, so the question is there confirmation bias on, sorry?
So is there confirmation bias on Planet Labs did something successfully, I should be the next Planet Labs, but just a tad bit better? Because we tend to see that.
Well, that's the easy route. I mean, yeah, there's a lot of people who take good ideas and build upon them. I think that, new entrepreneurial ventures are just a recombining of the best aspects of other ventures that they've seen or that they've, learned from. So I think that there's a lot to that. I think the most successful ones are the ones that are, doing something really big and ambitious, and have found a neat combination of those things. And so, is there a direct correlation to how much recombination to the success or to success of the company or the ability to raise capital is, well, I don't know if it's a direct correlation, but be interesting to look at. But no, I mean, I think it's perfectly fine, for people to look at success cases and then to model themselves after them in some way. But yeah, if you want to set yourself apart in a market that's moving as quickly as this one, and as dynamic as this one, then you should be thinking probably bigger.
Thank you very much. So to go back to the original, question, I'd like to ask this question to Tom, but give it a little context just for something that I'd come across a little while ago. Space is, again, not new, sort of changed to make space only more attractive from an investment standpoint. And little known report that, at least I think for the general public, flew under the radar in 2007, the National Geospatial Advisory Board commissioned a commercial remote sensing study that looked at what you could do if you started combining some of the capabilities of the national technical means, so all the spy satellites, Earth observation, those sort of technologies, into commercial packages and platforms. It was a very well-written report, and it really got me thinking that if this was put out in 2007, what does that mean for the investment thesis on the, on behalf of the federal government in terms of, is this still new for you, or have you been recognizing that this is coming, but opportunities just haven't existed?
I think it's still relatively new, and actually NGA put out a commercial GON strategy last fall as well. So it more so the course of time. I think our customers are looking at this as a way to augment what they have, so it's not replacing anything, but it's building on the capability and leveraging. Number one, leveraging NewSpace for their own means, but also keeping track of what's out there just in general, knowing what anybody else can access as well. So it's kind of two sides of the coin. You mentioned NGA. I think they've been particularly forward-leaning in terms of looking at how to get engaged with commercial companies. We hear a lot from them. They're actively meeting a lot of companies on their own, so it's a good route. And I think other agencies are out there as well. DoD is certainly doing a lot as well.
Yeah, we've heard some good things coming out of the Bay Area with DCUIX.
DIUX.
Thank you, DIUX. I knew I was going to mess up that acronym. But it really seems as though they're making a big push, and I know us from the industry side are very glad to see that. To touch a little bit on that, are there any other areas that you see as new and emerging that might be somewhat related to your mission statement?
I think we've touched on a lot of them. Right? I mean, just again, we're looking at things mostly from the commercial side. So echoing what a lot of these guys have said, I was going to pick up on one of the things that Sunil did earlier. As we look at the market, we do see some confirmation bias. You got to be careful in terms of investing. And you see at one point we're seeing lots of optical constellations. Everybody kind of saying the same thing. Lately, it's been analytics companies that are all going to sell to hedge funds, and oil and gas, and agriculture, and they're all picking at the same markets. And I think as you look out there and try and figure out who the winners are going to be, you really have to make sure that these companies are looking at who they're selling to, and then how they're playing in the ecosystem. So, from a customer standpoint, if you're going to make a bet on a launch vehicle or a constellation or an analytics company or anything else, do you understand kind of how they fit into the market, and is what they're saying real, and are they going to be sustainable down the line? Because I do think a lot of these companies kind of come to you and say, hey, this is what we're going to be doing, but there's not a lot of research behind it.
Yeah, and you touched on a good point about sustainability, and one of the big things that we've talked amongst the crowd and other people here at the conference is, can the business case close? Can you actually get an exit, whatever that exit might be, an M&A, mergers and acquisition, IPO, or hopefully you're doing something that returns the value, continued operations, and shareholder payback. Sunil, we'll come back to the bigger question at hand, but what are your views on can the business case close in terms of what you're seeing out there, and what would it take to help that business case close?
What we're seeing a lot of is cost reduction throughout, replacing, this is specific to constellations, but a general philosophy of replacing one monolithic single point of failure that has triple redundancy, high cost, with a distributed approach, or if it's analytics, using AWS cloud servers, or if it's a constellation, using your own CCDs and making your own star trackers, for example, to reduce cost. And if they fail, no big deal. That allows significantly less capex up front before you start to generate revenue. Remote sensing has the nice property of having one or two satellites can generate revenue versus communication. At least like the OneWeb approach, you kind of need all of them up. So it's unfortunately all or nothing. But if you can work incrementally, remove risk at each step, and try to get customer revenue in early, either pre-launch revenue commitments or just small bits of revenue as you're growing, then the business case, even if it doesn't close, it's not, you're not concentrating all the risk at the end. You're not just sort of hoping that one day you'll unlock $8 million of customer LOIs. You're slowly getting folks into the rhythm of paying. You're slowly getting into working through all the issues of distributing the imagery data or distributing the, whatever your end product is. And so it helps a lot. The cost reduction helps a lot for closing. The agile strategy helps a lot for having the business case close. But we're still, from a venture perspective, we still have companies, including companies like Spire and others that we've invested in, that have generally raised more capital than an equivalent tech company would for that point. But that's just dropping dramatically. And so I think there are companies out there that have raised a Series A, a $5 million Series A, and launch a mobile app. Or they raise a $5 million Series A and literally launch 2 or 3 satellites into orbit. And that's amazing that it's sort of neck and neck. And I think this one still has a lot more room to fall to get even cheaper. So the cases are closing, and they're going to close more and more.
So, no, thank you. And, back to the larger question, space industry is not a new concept, so what has changed to make it suddenly more attractive from an investment standpoint? You talked about the cost being driven down, and I think that's a huge, huge deal and really makes it more attractive. But what other trends are you seeing?
It's fun when we pick on old space because, we're not dumb, they weren't dumb. It's just that because of a lack of commodity parts, and that yields a culture that's really risk averse. So no one better make a mistake. We have this one engine that's worked for 30 years. Why would we change it? Because we have exactly one shot to get it up there, and it's this $500 million payload. It's what all builds on itself. And so once you couldn't just do multiple satellites and keep the culture the same. Everything changes at the same time. Multiple points of failure, commodity parts, agile approach, and then feature improvement through the higher revisit, right? That's the small sat constellation approach that's played out for Skybox, Spire, Planet Labs, 20 other companies that are coming up, coming into the forefront right now. So that's probably the single biggest trend is this shift to faster, better, cheaper, smaller. The CubeSat standard helps a ton. I mean, the fact that there are companies like Kitespace and Pumpkin that have these parts where you just buy them and they work. I think Jonathan mentioned the PC industry. I mean, the fact that you can buy even like 1990, a PCI card and it just works. You just stick it in, you know it's going to work is a big deal, and it accelerates development. There's a company, Cubos, that's building open source software for satellites, and so like the idea that you now buy a non-technical person could buy a bus, a 3U bus, could buy these parts, could buy a ADCS system, could buy a power bus, and could run Cubos on it. It means you don't have to worry about all the technical energy. You can worry about the bigger business plan and how to integrate things and how to innovate on different elements besides the technical. You get to sort of abstract away the complexity and work on higher level problems. So that's sort of the second big thing going on.
Yeah, I think that's a great insight. So let me ask this to the audience. How many people in here would you consider yourselves entrepreneurs? All right, so I need two of you. We're going to start a cheap company. It's going to be software defined, and we have to be agile and fast. All right, that's what I took away. So being that this is emerging businesses and risks and opportunities, just open question to all of you. What are we missing? We just started this company. What's their products? What isn't being discussed amongst maybe the investment community towards entrepreneurs, or that we're not discussing amongst ourselves that would really help us out here?
There's a saying, there's only two things that kill startups: founders and money. And it's very true. I've seen many great startups die because the founding team couldn't get together, couldn't gel, ended up with some big fight, went separate ways, etc. I think that, first off, the act of sort of being one person and convincing or begging or borrowing or bribing or whatever you have to do, 2 or 3 other people to come along with you and take this huge risk to start a company is the first most important test of a business opportunity, right? Can you convince 2 or 3 other people to come along with you and to take that bet? It is very hard to start a company, to get the equity distribution right, to get the synergy in the team and the balance, Like one of the things we use in our analysis of teams is essentially analysis of how much they're thinking and how much they're doing. And a lot of startups by default tend to have teams that are loaded up on thinking skills, but perhaps fall short on the doing skills. Things like going out the door and talking to 100 customers or having a great go-to-market strategy. So, one thing I would recommend for any entrepreneur is really don't, it's easy to just sort of cast it. We're going to start a company. Okay, the thing is that we're going to build this new sensor, right? When you start a company, your product is not that sensor. Your product is not that rocket. Your product is the company itself. And you need to be thinking so much, especially if you're the CEO, if you're the sort of first founder, about how that product is going to be structured, right? How you're going to sell it, which is how you're going to raise money, how you're going to exit one day, how you're going to divide the equity up. So the one big thing I'd say is I've seen so many companies that are sort of built defective from the beginning, and then that comes back to haunt them. They fall apart in some way, or there's some ugly founder walking out slamming the door scene. Spend some time at the beginning of the process, talk to mentors, talk to great attorneys in the industry, talk to friends and associates who have been through it before, to really figure out how to start the company in a very healthy and holistic way. Among other things, that makes it so much easier for all of us to invest. When we see weird structures or weird documents from when the company is first put together, just like, I know everyone's like, oh, geez, what are we going to do about this? What the heck is a Texas LLC anyway? Do they have LLCs in Texas? I didn't know that. But there's sort of checklists you can go through. So I think that's one of the biggest things. Get your founding team right. Equity itself is really hard, especially for a first-time founder. You want to be fair, and you say, let's all split it equally. It's never going to be equal. You're going to be sitting there afterwards going, that son of a didn't do as much as we did. So how you prepare for that, how you incorporate that into your documents. The other thing I found about equity is if you take all founders and you say how much should you get, it almost always adds up to about 250% of a company. I haven't figured out how to start a company with 250% of shares. So just really think about getting the product, which is the company itself, right from the get-go. And if you don't know how to do that, if it's your first time, reach out, talk to people. They'll help you. They'll give you tons of advice and tons of horror stories.
Absolutely agreed. So, Chad, what are we missing?
Well, I mean, Jonathan does a good job of summing it up. I mean, those are the key things. I mean, it sort of depends. I mean, there is a lot of real technical things that you should think through, right? So when you're setting up a company, you should talk to somebody who knows how to set up a company, right? So when you figure out all those things that Jonathan just figured out, equally important is to like get your shares right, get your structure right, and do all of that in the beginning, because once you set it up, it's set in stone. You can chisel that stone away, and you can change that stone, but there's a foundation there that's going to follow you. So talk to people and get the right people involved early on. And there's lots of people out there, lots of companies and service providers that did jump in the conversation, are happy to have real conversations with startups to build future business with you so you can protect your cash flow. So from a very practical point of view, that's a good one. But then it's also, I mean, it comes back to, points that we've already made about, having your idea together, figuring out how you're going to sell it, and then going out and doing it, and then coming back and iterating on that and finding a way to basically test your hypotheses a few times and see what's happening, and then iterate on those, pivot if you need to. And then look for the market validation to see which one you want to really chase down.
All right. Sunil, what about you? Anything we're missing?
Yeah, I think there's a big one. I think that we, as an industry, are focused on selling to the industry itself. I think in order for VCs to continue to flock to this sector, we need to tap into new customer wallets. I think about, if you were going to start a tech company, and people ask me all the time, the best advice I tell them is go find a strange pocket of the world that has been missing some technology for some reason, and go after that. An example of that would be mobile. Everyone now has mobile phones, and hourly shift workers were still punching in and punching out and doing vacation days by phone and paper. And there are several companies that now sort of handle a lot of the act of bringing mobile technology, which isn't rocket science, and finding an industry that was just structurally or just sort of didn't get touched by technology in as heavily as it should have. So now, fast forward that to the space sector, everyone in this room knows what space can do. I mean, there's satellites launched, there's sensing, there's taking stuff up to orbit for microgravity. So you have these things on your utility belt. Now go meet with 5 or 10, strange is the only word I can use, not small, but just off the beaten path industries, not agriculture, not maritime, but there's a million other industries that could benefit from space. And don't just stop there by saying, oh, I bet hourly workers at fast food restaurants, the QSR industry could benefit from space awareness, and I bet they would buy it. No, do the final step and go ask them. Go on LinkedIn, ask anyone here to connect you to somebody who works in McDonald's corporate to see could they benefit from having better M2M tracking of their food and delivery. And would a high revisit satellite constellation help that? But repeat that over and over and over, and the stranger the industry you go for, the better it'll be. The potential, the bigger improvement you're going to offer them by bringing them these items on your utility belt that come from the space sector that they never would have had otherwise. And in doing so, you unlock a massive new market. You're not fighting over the same 1 or 2 billion of remote sensing revenue back and forth.
Fantastic. And Tom, what about you?
This may apply to perhaps later stage companies, but are there things on the regulatory policy side that might get in your way? So as you put your business plan together, where's the sort of out of left field type of thing that could come from a policy challenge or anything on the government side? So I think it's a moving target. Things will change along the way here, but right now, just to be cognizant of what's out there that might be a roadblock.
And I think that's great advice on the policy side, and I don't think we see enough people be aware of that and what could change between now and when you actually get to the market. So there were a lot of hands that were raised. I definitely would like to give a few minutes for people to ask questions, but before we do that, so apparently I'm going to take 150% just to be a little better, as my founding equity. And maybe we'll give 25 to each of the other two. So we're only at, 200? So we're good. What do I do to actually go and approach someone like you? Obviously, please don't give your phone number or your email out, here on stage. But when I'm ready and when things are good, what do we do? What's your best advice, for approaching someone like you, your fund, your company? and just quickly, down the line. Do you want to start, Tom?
Sure. We're interested in this sector. We want to talk to a lot of different companies. I think for us, just be cognizant of which customers we serve and how it might plug into the mission that we're going after. When we talk to a company, we can figure out how to slot it in and say, okay, this might be relevant to customer X, Y, or Z. But if for example, it's an idea about going interplanetary or something, it's probably not relevant to our thesis. But if it's something that might plug into an intelligence community use case, then reach out.
Fantastic. Sunil?
In terms of how to reach out directly, here, by email, whatever, in general, and the folks in this room are, I think, volunteering that they want to meet more space startups. So find us and reach out to us, or you said don't give out email, so I won't. But normally I do, just anyone should reach out. In the outreach, though, I'd say there's a couple general rules. One is be concise and short. Know who you're talking to, and in this case, you don't need to tell us that the space industry is a $100 billion industry growing at a 7%. Like, we don't need any of those slides or that paragraph in your executive summary. Keep it to one short sentence or two about what you do. I'll say myself, and I think most investors will agree with me, a lot of pitches, you're 30 minutes into the pitch, you still don't know what the company actually does. So if you can just distill it down to, we take pictures and sell them to people who steer boats so they can steer better. Right? That's a really, I mean that honestly. If I could hear that pitch, and then you can give me all the fancy jargon and the other context, but keep it really concise, because we see a lot of pitches, and the benefit of this is just to make sure that whoever you email will actually respond to your email, will get it quickly. You probably have 10, 20 seconds if it's cold outreach before somebody makes up their mind and sort of moves on or decides to open up your one attachment. That's the last piece. Don't send us 4 or 5 attachments and a bunch of articles and a bunch of other stuff. Just give it to a short. This is like the first date. So you just want to sort of get in, get out, make a good impression, and then set the stage up for the second piece, which fourth piece of advice is don't sell past the close. So if you do have, if you meet one of us here and we sound excited and we're like, yes, let's set up a meeting, then you're sort of done at that point, and now you go set up the meeting. Don't just keep pushing. Just like there's a lot of parallels to dating. It would be sort of continuing, and don't propose too early, and all these things. But we're generally pretty straightforward, and if you keep it simple, it helps a lot.
Yeah, sorry for the long letter. I didn't have time for a short one. Yeah. I've heard a lot of what these guys have said, and I think that to build on your points, Nils, is that you're also demonstrating when you sell something, especially when you're introducing a new idea, and especially if you're doing it, in a crowded place or something like that, right? There's a lot of stuff going on. There's a lot of pitches coming across the desk. Being able to chunk it up into bigger and bigger bite sizes is very important. So having an initial sort of, very short, sort of concise summary of what you do, an expanded version that you can delve into is really important, because it's not just for our benefit or to help have an efficient meeting, but it's also demonstrating your ability as CEO to sell your product and your company and everything else. So if you can effectively sell it to us, then it's a good indication you can probably effectively sell it to somebody else. So that's probably all I'd add.
Exactly what you said. I think everyone probably has like a 5 or 10 or 20 minute. When I was an entrepreneur, I had like a 10-minute pitch. You should actually have a 10-second pitch and actually have a 1-hour pitch. But the 10-second pitch, very few entrepreneurs are comfortable doing that, but you have to be. The 10-second pitch for customers or for investors. Tactically, your 20-slide PowerPoint, there should also be a 2-slide PowerPoint version that you can send out. And the 20-slide PowerPoint, there should be one version that you present that doesn't have a lot of tiny words, and then one that you send that does have a lot of fine print that you can read through. So if you can separate things, then you can position it. And this isn't just because investors were lazy or anything. This is just a good way to sell when you sell to customers or partners or investors. Having different packages for different formats and venues and time frames is extremely helpful.
Knowing your audience.
Yeah.
And Jonathan, to close, what about you?
Yeah, I think very similar. It's important to keep in mind that as investors, we tend to end up with actually more money than we have time. And time is the biggest challenge, and thus all this emphasis on 10 seconds, 2 pages. It's not that we don't care about you or your ideas. It's that depending on the stage and the position and the process that we use, we may talk to tens or hundreds of companies for every deal that we actually do. And we have to be able to work through that process rapidly. So, being able to boil things down to sort of the movie, pitch version of your business plan, very important, very key. And absolutely, after you beg, bribe, and borrow a team together, the next thing I could have self-funded many of the companies that I started myself over the past 15 years, but I didn't because I believed that one of the most important tasks is to convince somebody else to take their hard-earned money or their limited partner's hard-earned money and to apply it to your business. As entrepreneurs, it's easy to fool ourselves. Like, you have to have this thing in your head as an entrepreneur. You're crazy enough to believe in your idea at any cost. That, for example, is not a good approach to use investing in the stock market. You have to keep that in mind. Like, test your ideas out with as many people as you can, whether it's the customers, investors, your co-founders, and figure out how to really articulate things quickly because it's limited on time. For me personally, also, don't send me an email. I hate email. Text me, Facebook me, Tinder, whatever you want to do, anything but email. I get so many emails that are not important. You know, I have to swipe left or swipe right, we'll move on. It's all good. I sort of joke, but in the dating analogy, like, this world, especially the early stage investment side, is moving way more towards speed dating than dating. You know, the whole sort of 500 startups, 500 VCs, smaller initial investments, bet more later. There's a lot of momentum in that direction.
Oh, fantastic. Well, thank you all for those answers. We'd like to give a few minutes for people to ask questions. There are some microphones in the center if you want to come up there and do that, and we'll be happy to answer what you got.
And if you're tweeting, that's hashtag Tinder pitch.
We should start that. That would actually probably do well.
Yeah. Help me out, people.
Hi. From the perspective of deciding how you're going to allocate equity in the beginning, have you or any of the startups you've worked with used the slicing pie methodology, if you're familiar with that?
Go on.
Yeah, I'm not familiar.
Sounds interesting.
There's a book and a website called Slicing Pie, and the idea is that the amount of equity is based on how much you put into the actual building. It's not based on your idea. It's not based on, you're one of 3 friends who started the company. It's based on who's actually doing the work. It's based off of the hours, funds that are put in, etc.
I looked at this quite a bit, actually. I think I wrote something on it when I was doing my MBA. So a little bit it's on the idea, but it's fleeting, right? The idea is very valuable in the very beginning, and then it suddenly becomes not valuable, right? Because when your idea is out there, I mean, it's free for others to try and do better than you, and then it all becomes about execution, right? And so also it depends on when you actually form your company. Do these things start to come into play, right? Developing your prototype and developing your product and service is very important, and then bringing in revenues is also very important, But at different stages, these things happen. So. Your question is about, are we familiar with that, and have we seen it used versus
have you seen it used?
Yeah, so, so I've definitely spoken to many entrepreneurs and used this in my own entrepreneurial ventures and with friends and things like that, talking this out. But yeah, you have to know where you are and where the company's going, and you have to know which of the founders are doing which things, and if you're able to bucket it into 5 key things that the company needs to be doing and who's going to be doing those things, it gives you something of an objective framework to sort of have the tough discussions, which are really qualitative, subjective conversations. It puts like a framework around it and helps you have those conversations with people who are often your friends. And,
I did this in one of my first startups. I will never, ever do it again. So, I don't know how many of you work in the sort of contracting world. The contracting world ends up with a lot of like padded hours, getting paid by the hour. Yeah, I was thinking about that for 4 hours on Thursday. That's another $1,000 right there. You don't want your startup to be like contract padding hours competition. Which, in any sort of model, you have to always think about what the incentives that you're not intending are. And this is a big one, a big challenge in using that kind of an approach for a startup, at least in my experience. I'm sure that there are people who can make it work, but it didn't work as expected. The other thing was that there were tax consequences that at the time I did not understand for taking that approach. And so that's something that would also be important to talk with an expert about.
So I haven't heard of that idea, but I'll throw out 2 other data points. Noam Wasserman, professor, has studied a lot of founder equity splits, and you should Google as to the rationale, but he talks about a 10 or 20% idea premium whenever founders are setting up equity. a more helpful mechanism for managing this. I think what you're talking about is sort of trying to manage it proactively up front, setting up a lot of rules. Investing in general solves a lot of problems. And so the idea here is that even though you're founders and you started the company, it's your equity, you still so you and your co-founder both choose to vest your equity over 4 years, vesting monthly, maybe even with a 12-month cliff, so that if somebody quits after 2 years, they only get half of that piece of the pie they thought. If they quit after 9 months, they get nothing. And so it usually comes up when investors show up, but it's even good even when it's just two people starting on their own, because it keeps each person honest and makes sure that incentives are aligned. And again, it'll handle a lot of the cases you talked about.
And just to follow on that real quick, I not only will not invest in companies that don't do vesting for founder shares, I don't start companies that don't have that. So I have companies where literally I own 2/3 of the company. I do think that there's a bonus for coming up with the idea, also sort of bonus for highest risk money. So I have companies where I came up with the idea, I brought the team together, I put in sort of highest risk money, and still all of my shares, as the guy who started it, are subject to a 4-year repurchase rate. I think it's the most healthy thing that you can do when you think about how to do that equity structure.
Cool. Thanks.
Hi, I'm Britta Jacobs with the Martian Trust. I'm curious about your attitudes toward crowdfunding. Have you ever participated in a crowdfunding campaign? Have you ever invested in a company that has a crowdfunding activity as part of their strategic plan? Do you think crowdfunding could disrupt some of the confirmation bias that we were just talking about?
I have strong feelings about crowdfunding, and I'll tone those down. I think crowdfunding is fantastic for philanthropic or not companies. No, I mean, there's from an investor's perspective, there's not a lot of information that exchanges hands, and I know there's a lot of things that are changing at the moment. With the new rules for a company to raise money, it's very expensive. And there's a whole, you'll be a startup company that's trying to do something and be agile and nimble and do all of these things, that we've been talking about doing. And now you have to build in like a regulatory reporting team. That's the first thing you have to do to it's basically like you've done an IPO, but you've done it at like a micro scale. So the reporting that's involved, I think, is going to be problematic going forward. And that's all sort of up in the air. But from an investor perspective, I mean, investors typically overpay. They pay much higher than and this is evidenced by follow-on rounds when they have a priced round with angels or something like that. There's just not an efficient flow of information. It's all so very limited. So, and I could go on and on and on. But I think that there's a lot of value to crowdfunding. I'm not so convinced of it in terms of equity sort of financing.
What about disrupting the confirmation bias, though? Having different kinds of mini investors.
Yeah, I mean, we're already seeing crowdfunding sort of literally being used as a diligence stage. There's been a couple of companies recently who did a crowd-funded product. It had good success, and then they got venture capital and shut down the crowdfunding product and gave all the money back. So essentially, it was one of the forms of going out and talking to 100 customers. Maybe this was a way that they go out and talk to 100,000 customers. I think there's a lot of good things about crowdfunding. I have participated in crowdfunding products and projects and gotten some great stuff. I've participated in others and received a hole in the ground. It's very high risk, somehow perhaps even higher risk than venture capital, pretty amazing market. So I think if you are looking at building like a specific product, right? Like you're going to build this gizmo or this luggage, or you want to make this jacket, I think that crowdfunding today is showing signs of success. I think if you're looking at building a more long-term company, I think there's still a lot of challenges around crowdfunding today.
But I think there's two kinds of crowdfunding we're talking about. One is for equity, one is for like pre-launch revenue.
Right.
Very, very completely different, opposite ends of the earth. In terms of generating revenue or customer commitments before launching a product, I think it's a phenomenal signal. I've been banging this drum of customer signal. Tile, the little lost and found white thing. I led our seed investment in Tile when they had $8 million of pre-orders through their through their self-starter, but basically Kickstarter project. So that's awesome. And then we just led the Series B round last week. So that's really, really good signal, especially when, and it puts to bed all the concerns of do people want it, do people want this price point, do they like your description, are you able to sell it, all those disappear. So that's really helpful. I struggle with how that applies to space. I know Planetary Resources at some point did one that I guess they should at some point comment as to why they did it, but that was great for generating awareness. This whole selfie with an orchid, the photo looking back at you, so it was great for generating buzz. I don't think that shows signal that there is economic value in asteroid mining, sort of an intermediate step, but I think in general it's a great way to test markets.
Yeah, and I think like Tile, right, because it was about a very specific thing initially. I think that's where crowdfunding is phenomenal.
Yeah,
agreed. I think these more, like the Planetary, where we have a company, we're going to do this one thing on over here, and it's going to be crowdfunding. I think that's a little challenging. And in terms of the equity, yes, there are regulatory changes that essentially would let you crowdfund actually fundraising, not like pre-purchasing a product. Everyone I've talked to is really sort of sketchy about avoiding that. So, I had conversations with my attorneys about it a couple of years ago when these sort of things first came about, and their position was, yeah, like the law's on the book, but there's no court precedent on what's going to happen when things go wrong, so we're not touching it, right? So, maybe down the road, maybe in 10 years when some of these sort of equity crowdfunded structures have blown up and there's been the lawsuits and the court cases have been established and there's precedents, maybe people will be more attractive about approaching it, but not right now.
Fantastic. I think we got time for one more quick question from you, sir.
Hi, I'm Parminder, founder and CEO of Robodup. It's a robotics and a drone company. So my question is, how late in the game I can still bring a co-founder to the company? Is it 6 months, 9 months? Because I'm bringing somebody who's a marketing director at Samsung and T-Mobile for marketing purpose in my company. So he's asking for a co-founder status, and he's putting money into the company as well, plus he's bringing the value to sell a product. So I'm struggling with that. Can I still give him a co-founder status? And he's bringing a lot of value. He's bringing other investors, plus he's investing his own money as well.
Never confuse marketing with reality. Being a co-founder is not a legal term. It's a marketing term. You can bring on a co-founder whenever you want, honestly.
Okay. All right. Thank you.
All right. Well, thank you very much to our wonderful panelists.
There's typically add a few things to it and meet the need for us as well. We're relatively new to space investing, but excited about it, and have done a few things over the course of the last 18 to 24 months. But it's a very exciting sector, and we're looking forward to being part of it.
Thank you very much. Sunil?
Thanks for having me here, Duff. My name is Sunil Nagaraj. I'm with Bessemer Venture Partners. Personally, I'm a huge space and astronomy nut. Always have been since I was a little kid. And at Bessemer, about 6 years ago, we started to invest in the space sector. That began with our 2010 investment in Skybox Imaging. And in 2014, when that company was sold to Google, we all started to realize that space feels like what we invest in primarily, which is tech. In Bessemer, we were the first investors in Pinterest, some of the largest investors in LinkedIn. Twilio went public today. We were the largest investors there. So we mostly do tech, but because Skybox and the characteristics of how quickly it grows and how little capital it needs, got us really revved up on space. So since then, we've invested in 2 more space companies. In December 2014, we invested in Rocket Lab. And then in June 2015, we invested in Spire, a small sat constellation. So I'm hoping to invest in more and more space companies and also help out the ecosystem where we can.
Thank you very much. Chad?
Thank you. Very happy to be here. So Space Angels Network, I think you've heard from a number of our members and portfolio companies throughout the last few days, so I'll try not to repeat the things that you've already heard, but we are a global network of accredited individual investors who invest specifically into space companies. So we've been around since 2007, way back before there was a whole lot of entrepreneurial activity in the space sector, and we've been growing with it. And we've done 33 companies, invested in 33 companies to date. You saw on some slides earlier that we've done 4 this year. We've got a couple more that are in the process of closing. And so, yeah, and we just, I mean, we just broke 200 members, 23 countries in this last week, and I think we've got, 15 new members just this week. So, I mean, the growth is really exponential.
Just want to head up here, that'd be great. Thank you. Well, thank you, gentlemen, for joining us. We're very happy to have you here and look forward to a good conversation. There'll be time for questions at the end, and I think the conversation today will really prompt some interesting ones. But as Andrew had said, my name is Jeff Matthews. I'm the Director of Venture Strategy and Research for the Space Frontier Foundation. I'm also the Director of their NewSpace Venture Labs, which is a new initiative to really help promote what the Foundation's core tenets are of getting entrepreneurship towards investment-ready ventures to fill in the gaps. We couldn't be here without these wonderful gentlemen because we try to feed those companies into their deal flow and their businesses as a whole. So let me introduce them. We'll start at the end and go down. On the very end, we've got Jonathan Taylor. He is a mentor capitalist at Extranet Ventures. We've got Chad Anderson. He's the managing director of the Space Angels Network. Tom Gillespie, a partner at InQtel. Sorry, Sunil, I skipped over you. And Sunil is the vice president of Belvedere Venture Partners. So why don't we go, Tom, why don't you start if you want to just tell us a little bit about what you're doing and where you're from.
Okay. Tom Gillespie, InQtel. Excuse me. I work as a partner in the investment team at InQtel. We're a strategic investment fund that works with the U.S. intelligence community primarily, a little bit with DoD and Homeland Security as well. And we put money to work investing in commercially oriented companies to bring them across over to serve intelligence use cases as well. So with a little bit of money, we take a commercially focused product and solve a challenge for our customers. We work with about 10 different government agencies. We're not part of the government. We're set up as a nonprofit government contractor effectively. And we put about $500K to $3 million to work in any given transaction. And that's a combination of equity investment and also development. So we'll ask a company to take what it's doing commercially, and over the course of a couple of years.
But, one of the greatest things that I've noticed being here in Seattle, so just a few reflections on the conference, is the conversation around not if we invest in space, but when we invest in space or how we invest in space. It's no longer this question of the value of space. It's a question of how do I play into this ecosystem? How do I play into this economy? And, where's my sweet spot in the greater space economy, the space value chain, and what can I do to help further this along? So I think that's great. I think, we're all very, very excited to be chatting about this. Being here in Seattle, we've got the largest turnout we've ever had. I'm very fortunate in the fact that this is my first year here. Last year I was merely an attendee, and I'm lucky enough to be a part of the foundation and driving the sort of next generation of entrepreneurship and industry engagement. We're thrilled to have you all here. And, well, you know what? I have a bunch of facts in case anyone wants facts. So let's do this while they get all mic'd up. It's significant. It's a good time to be in space. It's a good time to be starting a space business, for that matter. You've got a record number of investment last year. You've got multiple market gaps where technologies can easily be extracted, put into the market, commercialized, and provide value to not only the space industry, to ourselves, our colleagues, and our friends here, but to the global economy as a whole. There's only room for growth. And from an actual investment standpoint, there's some interesting facts. 803 are the number of VC firms in existence. There's over 1,200 funds, and the number of VC funds raising money in 2014, the last time this set of statistics was really updated, was around 250. That's significant. There's a lot of money out there, but they're not just looking for investment in the new space industry. They're looking for investment in energy, in analytics, in data, all things that can help us. So we're excited to be a part of this growth. We're excited to have a great panel coming up shortly, and you'll hear from some good viewpoints. I think they're look so they're ready. So if you guys, so speaking of areas to invest, question for you guys: what space area presents the greatest immediate needs, and do those needs translate into startup opportunities? Should someone be pursuing a startup? Is it right just because you have a new technology? If anyone wants to jump in and start with that, I'll leave that one open.
I'll start with one that we've seen in several companies. So I'm going to draw a lot of parallels between the space industry and the tech industry. And it turns out in 2016, in the tech, if you wanted to do a tech startup, the actual act of building whatever you're going to build is not hard. It's not the hardest part of your business. The hardest part of a tech business is figuring out what to build and then actually starting to sell it. And up until recently, space, the hard part was actually building it. And more recently, we've learned that there are other sectors of sections of running a space startup that are more difficult than the actual product. When we were on the board of Skybox, we learned very quickly that launch, just to answer your question very point blank, launch is incredibly tricky and difficult and gets pushed and gets delayed and is subject to geopolitical risk, et cetera, et cetera, et cetera. So and that's why we led to our sort of quick and decisive investment in Rocket Lab. And now, as part of the board at Spire, we see the impact of launch delays yet again. And so, that's still an unsolved problem. Launch presents a major opportunity. I'll say that the characteristics of launch are pretty different than the other space startups we're looking to invest in. Launch, in many ways, is kind of relatively big, relatively expensive. One of these things where you sort of need to go into a room, work on it for a year or 2 years, cross your fingers and come out of the room. It's a little different than putting up a Pathfinder satellite for $200,000, seeing if it works, putting up 3 of those, seeing if those work. Those are the kind of business we prefer to invest in. But for the moment, launch is totally a bottleneck, and there's still nowhere near enough capacity coming online to meet that demand.
Thank you, Sunil. Jonathan, I'd love to hear from you on that topic about what you think presents the greatest immediate need, considering that you are a more recent investor in the sector.
Yeah, so launch is definitely the tip of the spear. It is the single biggest challenge for the industry to solve.
We have a footprint in most areas where there's space activity, and it's just really exciting to be part of this sector and seeing it all come together, and being in Seattle where there's been a fantastic turnout and a great conference.
Thank you very much. Jonathan.
Yeah, hi, Jonathan Taylor. I started off life as a software engineer and amateur space geek. I was at the first shuttle launch and about half of the launches after that. And after a while on the software side, I accidentally got better at transactions than I was at coding. And along the course of some companies that I started, I had acquired 17 companies and sold 8, and eventually figured out that, that had more value than writing code, at least for me. Since 2013, I've had $250 million of exits in my portfolio companies, and I've taken a lot of that and been reinvesting that, especially in the NewSpace ecosystem. I've made my first 2 NewSpace investments here in the last 6 months, and look forward to doing more.
Thank you very much. So we'll dive into the questions in a second to get the panelists going, but let me give you a little bit of background on why, again, this is important and what this means when we talk about the space economy. So a quick definition of the space economy is the full range of activities and uses of resources that create and provide value and benefits to human beings in the course of exploring, understanding, managing, and utilizing space. It includes all public and private actors involved in developing, providing, and using space-related products and services, ranging from research and development, the manufacture and use of space infrastructure, to space-enabled applications, and the scientific knowledge generated by such activities. Last year alone, we had a record amount of investment. If you look at the investment put in, it was almost $2 billion by venture capitalists alone. To give you an idea of what that means for the grand scheme of things, since 2000, the total investment from any source in the space economy has been approximately $8.1 billion, and of that, VC is almost $2.9 billion. So very significant trends of upwards investment, and we're very excited for it.